Investing in a bear market may seem like a bad idea, but you could use the bear market as an opportunity to make some smart investments. Millionaires are done in a bear market and not in a bull market. We bring 5 super smart tips to maximize the crypto bear market. Watch the video till the end for a few super smart tips to use the bear market to your advantage. Welcome to Crypto's Jenny. If you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications so you wouldn't miss out on new updates in the world of crypto investing. Since the crypto industry is considered to be more volatile, it is considered usual to see stronger and prolonged bear markets. Even 85% drops are pretty standard. Let's take a look at the 5 important tips you could use to invest in the bear market. Number 1. Don't panic. Many investors feel an understandable urge to cash out when prices plummet. But if you sell your crypto at a loss, the statistical, on-paper market downturn becomes a tangible, actual loss of your own money. Experienced financial advisors say it's best to take a deep breath and stay in the market. Every bear market eventually ends with market recovery, and investors who are able to ride out the storm are rewarded with gains in the long run. Individual cryptos may not survive a market downturn, but if your portfolio is diversified and you have nerves of steel, staying in the market can position you to take advantage of profit opportunities as they arise. Number 2. Look beyond price. While a crypto's purchase price may drop during a bear market, owning the coins or tokens could still deliver financial benefits. You might stick with a fund in order to earn fees from lending coins to a liquidity pool, or staking them to a blockchain consensus network. You might retain crypto in order to preserve your position in the decentralized autonomous organization that sets policies. You might hold on to particular coins that pay gas fees when you conduct transactions with a DeFi application you rely on. Bitcoin is a pure currency. Investing in Bitcoin is a simple matter of predicting whether the price will go up or down. But more and more altcoins are associated with key technologies like blockchain oracles, cross-chain commerce, and consumer entertainment. Those cryptos can continue to deliver financial rewards even if their prices go down. Number 3. Identify growing market segments. Some cryptos retain their value even during a severe market downturn. These tend to be coins and tokens that are associated with market segments that are seeing substantial growth. For example, cryptos that are used in the video game industry and online gambling have performed well despite market slumps. Coins associated with DeFi, fan-based NFT marketplaces, cross-chain communications, and other applications are worth evaluating, especially if you have specific knowledge about the operations of a specific market segment. It's also worth analyzing the performance of specific cryptos during previous market swings. Some cryptos have a history of losing more value during bear markets, while others lose less. Number 4. Make recurring buys. Smart investors weather bear markets with a strategy called dollar-cost averaging. They make small regular purchases according to a weekly or monthly schedule. This allows them to continue building a crypto portfolio without committing to a single large purchase that could quickly turn into a big loss. Cost averaging has the effect of smoothing out price volatility. Instead of the risk of buying at a very high or very low price, you build a portfolio gradually according to a time-based average price. As the market recovers, the value of your holdings will rise even though you experienced minimal risk. With cost averaging, you don't need to worry about timing the market and predicting whether prices are about to fall further or rebound. Number 5. Take a break. The first and foremost thing to do is take a break. During the downtrend of the crypto market, it is obvious to be negative, but it is also apparent to maintain a healthy state of being. It gets self-evident to have tunnel vision during such times. If you think you are facing this, you do yourself a favor and take a step back. Try to divert your mind off the market for some time, go on a vacation, or meet a friend whom you've not met for quite a long time, or indulge in some artwork. If you have faith in the potential of blockchain and cryptocurrency, keep in mind that the basics have never been more optimistic in the recent history of this industry. Now, over the last few weeks, the world's largest cryptocurrency Bitcoin, BTC, has remained steady at around $19,200, showing less volatility. market analysts continue to be bullish on Bitcoin's prospects in the coming months. During a recent interview, crypto trader and analyst Tone Vays said that he expects Bitcoin BTC to climb 5 times from its current position, meaning Bitcoin holds the potential to hit a six-figure mark in the next bull cycle. The veteran crypto trader is expecting Bitcoin's next halving cycle to trigger a bull run next year. He further stressed that he would be surprised if the crypto asset doesn't touch $100,000 in 2023. During his interview with Kiko News, Tone Vays added, "I do expect us to have a nice bull market next year because of the halving that's coming up. The halving will probably be a little bit sooner. People always underestimate it. Probably be closer to March or April of 2024. But the hype that the halving is coming will come to a lot earlier." Researchers say the rising prices of the average bull market last about 6 years and deliver a cumulative return of more than 200%. Bear markets last 18 months or less, and losses average 39%. These figures suggest that if you are prepared to hold your assets for 5 or 10 years, you can afford to take no action at all during a bear market. Simply wait it out. Prices will rise, your portfolio's value will be restored, and you will resume earning profits. Amid recent macroeconomic extremes, Bitcoin's hash rate and accumulation are soaring. So what could this mean for its price? Bitcoin has been consolidating in a narrow range between $18,800 and $20,200 since the mid-Sep price fall. In volatile markets like cryptocurrency, similar quiet periods of consolidation are rare. Recent Glassnode findings show that the current BTC price action resembles both pre-crash November 2018 and pre-rally March 2019. Despite price downturns, mining and accumulation statistics are improving. If you plan your response to falling prices carefully and commit to a long-term plan, experts say you could endure and even prosper during a bear market. Hope you enjoyed watching our latest video. While you are still here, please go ahead and click one of these 2 videos on your screen. Also check out our website and Twitter, links in the description.